The phone in your hand right now, your computer, even the clothes you're wearing, every one of them is the product of a lie. But not an ordinary lie. A lie so big that the day it collapses, the world economy will collapse with it. And the scary part? That day may be approaching. $1 trillion. Trillions of dollars. America printed them. This isn't a conspiracy theory. It isn't a prediction. It's written plainly on the Federal Reserve's balance sheet. Trillions in 2008. Trillions more during COVID. In the last 15 years, more dollars have been created than in the entire previous history of the United States. And here's what should keep you awake at night. After all that money printing, America did not spiral into hyperinflation. It didn't become Weimar Germany, it didn't become Zimbabwe, it didn't become Venezuela. The system held. How? Because most of those dollars don't live in America. They live overseas. In vaults in Tokyo, in accounts in the Cayman Islands, in oil trades in the Persian Gulf. Dollars work there, circulate there, grease the gears of global trade. They're not inside the United States. And as long as those dollars stay out there, the system holds. The machine runs, the music plays, everyone keeps dancing. But if those dollars come home, and there are concrete reasons suggesting they will, that's when the math breaks. That's when inflation explodes. That's when this decades-old order starts to crack. And if you're curious how this story ends, hit subscribe now. Because what you're about to learn will change everything. The issue isn't that America prefers dollars to stay abroad. It needs them to stay abroad. Its entire financial architecture, foreign policy, military posture, everything is organized around one goal: keep the dollars out there. So where are these dollars? Why are they there? And what happens if they start coming back? The dollar isn't just America's currency. It's the operating system of the global economy. When Saudi Arabia sells oil to Japan, the deal is priced in dollars. When a Brazilian company borrows, it borrows in dollars. When South Korea builds reserves, it buys dollars. When a Russian oligarch parks wealth, it parks it in dollars. 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 Always dollars. Between 40% and 70% of physical dollars circulate outside the United States. Hundreds of billions in cash sit in vaults from Moscow to Mogadishu. Foreign central banks' dollar reserves reach into the trillions. And then there's the Eurodollar market. Something most people have never even heard of, yet it overshadows almost everything in the financial system. Eurodollars are not a European currency. They are US dollars held in banks outside the United States. London, Singapore, Hong Kong, Zurich. Beyond the Federal Reserve's direct reach. Tens of trillions of dollars America created, but can't fully control. So if there are so many dollars overseas, why don't they come back? Why does Japan keep holding $1 trillion? Why does China buy treasury bonds? The answer is simple but deep. The world needs dollars. And there isn't anything else that does the same job. Not yet. The world needs dollars for trade. Oil, gas, copper, wheat, most global commodity markets are priced in dollars. That isn't an accident. It's the result of the deal made with Saudi Arabia in the 1970s. The Saudis would price oil only in dollars, and America would guarantee their security. The petrodollar system pinned the dollar to the center of energy markets. And energy is the foundation of everything. If your country needs oil, you need dollars. Period. The world needs dollars for debt. A massive share of international credit is denominated in dollars. If a Turkish company took a dollar loan, it needs dollars to repay it. This has nothing to do with whether Turkey likes America. It's automatic, ruthless, inevitable. As long as the debt exists, dollar demand exists. And dollars are more attractive than the alternatives, the most liquid currency. U.S. Treasuries are the safest asset. Even if yields are low, what else are you going to hold? The euro backed by 20 governments? The yuan China can freeze whenever it wants? Gold that pays no interest? The dollar wins not because it's perfect, but because everything else is worse. The cleanest dirty shirt in the laundry basket. All of this creates huge, durable, global demand for dollars. The world wants them, needs them, hoards them. And that's the foundation of everything. Here's where it gets interesting. The world holding trillions in dollars isn't just convenient. It's the foundation of American economic power, and also its greatest vulnerability. When the world holds dollars, especially in the form of treasuries, it directly finances America's budget deficit. America spends more than it collects every year. Every year, the gap, sometimes more than $1 trillion, gets covered by issuing treasury bonds. Who buys them? The world. China, Japan, Saudi Arabia, European funds, Asian central bank. They give America real things, goods, resources, labor. In return, they get a promise that America will pay them back with interest. In dollars, America prints itself. Think about that. Really think about it. This is what the French called the exorbitant privilege. America lives beyond its means because the world voluntarily lends it the difference. Not out of charity. The system is built so they don't have much choice. And there's another bonus. As long as dollars circulate overseas, the inflation impact gets spread across the planet. The Fed creates trillions, but they don't all stay in America. They disperse globally. Prices rise a bit in Tokyo, a bit in Sao Paulo, a bit in Lagos. The inflation tax is shared with 8 billion people. If dollars are offshore, inflation isn't fully at home. Now what happens when the dollars come back? Mechanically, concretely, China decides to reduce its dollar reserve. It sells treasuries. Supply rises, prices fall, yields rise. The interest America pays on its debt rises. Borrowing gets more expensive. The deficit widens. China now holds dollars and converts them into yuan, buys gold. But those dollars don't disappear. They move to whoever sold China the gold. And that party now has to do something with them. Dollars look for a home. And it's not just China. Saudi Arabia accepts yuan for oil. They've already started. India uses rupees with Russia. Brazil and Argentina talk about local currencies. Russia already shifted toward yuan. Each move alone is small. But together they mean a world that needs fewer dollars. And dollars that aren't needed overseas come home. Where? Into American markets. Foreigners use unwanted dollars to buy stocks, bonds, real estate. Dollars flow back into the economy. Liquidity rises. And the problems begin. Prices rise. Too much money chasing the same goods. Markets overheat. Capital inflates bubbles. Trust erodes. If foreigners don't want dollars, should I want them? This isn't hypothetical. We've seen pieces of it before. In the 1970s, OPEC quadrupled oil prices and dollar flows shifted. America fought inflation for a decade. Double-digit inflation, stagflation. The Fed chair pushed rates to 20%. A deliberate recession. People lost everything. In 2008, the opposite happened. Dollars flowed into America as a safe haven. The Fed created trillions, but the money didn't flow into wages. It flowed into financial asset. The S&P 500 soared while median income stagnated. Wall Street won, Main Street struggled. 2020 to 2022 was the clearest example. The government injected trillions. Stimulus checks, unemployment aid, direct payment. The Fed printed at a speed never seen. And this time the money went directly into bank accounts, people spent it. Demand surged while supply chains were broken. Too many dollars, too few goods. Inflation hit a 40-year high. 8%, 9%, numbers that seemed impossible. And even that wasn't foreign dollars returning. Those were newly created domestic dollars. Now imagine what happens when you add trillions of offshore dollars on top. America isn't passive. The entire system is built to keep dollars overseas. Sanctions are the most visible weapon. America froze Russia's reserves, Iran's assets, Venezuela's gold. The message is clear. Obey the rules and your dollars are safe. Cross the line and from 6,000 miles away we can erase your wealth. Powerful, but dangerous. Every use gives other countries a reason to search for alternative. Dollar-priced commodities are another anchor. As long as oil, gas, copper are sold in dollars, every country has to hold dollars. No dollars, no energy. No energy, no economy. Dollar debt in emerging markets is a third anchor. Turkey, Argentina, Pakistan, huge debts in dollars. They need dollars to service them. Even if they hate America, they must acquire dollars. And then there's the pull of American capital market, the biggest, most liquid stock market. Apple, Microsoft, Google, all in America. Silicon Valley has no equal. New York and Miami real estate are global wealth magnet. This pulls in dollars. But here's the crucial point. It pulls them into assets, not into the consumption economy. As long as dollars are parked in Apple shares or a Manhattan penthouse, they're not buying groceries. They're not creating street-level inflation. But those walls can crack. Loss of confidence in treasuries is the most dangerous scenario. If major holders start seeing lending to the U.S. as risky, selling begins. Prices fall, yields spike, borrowing costs rise, the deficit blows out. A self-feeding doom loop. De-dollarization is already happening. The dollar's share of reserves fell from about 70% to 58%. Slow but persistent and accelerating in recent years. Central banks diversify into euros, yuan, gold. Gold purchases are at record levels. They want reserves that no one can freeze, no one can sanction. Alternative payment systems are multiplying. China's CIPS, Russia's SPFS, India's UPI. BRICS discusses a shared currency. When SWIFT was weaponized against Russia, it lost its neutrality. Now every country has an incentive to build an alternative. Every alternative system, every bilateral deal, every transaction in yuan or rupees, each is a crack in the wall. Alone, negligible. Together, transformative. A major geopolitical shock could accelerate everything. A Taiwan conflict, Europe fracturing, a Middle East war. Any event that changes who trusts whom could trigger a rapid repricing of dollar asset. Here's the uncomfortable truth. America doesn't fear a weak dollar. It boosts exports. It doesn't fear a strong dollar. It attracts investment. It doesn't even fear the dollar slowly sharing reserve status over decades. That's a manageable transition. What America fears is very specific. Too many dollars at home at the same time. A returning liquidity tsunami that chokes the economy and spirals prices upward. The trillions spread across the world, sitting in reserves, offshore accounts, commodity markets, debt chains, are simultaneously America's greatest asset and its greatest vulnerability. They finance the deficit, suppress inflation, uphold the privilege. But each one is also a loaded weapon pointed at the American economy, held in foreign hands that may not share America's interests. The problem with the dollar isn't that it disappears. The dollar isn't leaving tomorrow. It's too deeply embedded, too widely used, too foundational. The problem is it coming home. All of it. All at once. And no one, the Fed, the Treasury, Congress, Wall Street, has a plan for that. Because the system was built on the assumption it would never happen. Now go watch my other videos. You'll see the signals of economic collapse, the cracks in the system. Like the video, leave a comment and tell me what you think. Subscribe, don't miss the next one. Because when the next collapse happens, the prepared will be the ones still standing.